Hi there folks, welcome to this week's weekly report, Monday the 19th of April. Gosh, the year is flying by. Spring is now truly with us. Okay, so for those of you that are following financial markets, it wouldn't have helped notice last week was definitely a case of risk on. Risk on basically means money is flowing into the higher risk assets. Stock markets across the globe were hitting all-time highs. Oil prices hitting all-time highs. We'll show you that when we jump onto the screens in just a moment. This week, all to play for. We've got lots going on in the Forex markets. The US dollar last week was under big pressure, despite some really positive reads that we saw released out of the US economy. Let's start off by looking at exactly where we are at the moment. Now, this is what I call the momentum meter. The momentum meter basically tells me where the money is flowing in terms of the currency markets. It shows me the strong currencies and it shows me the weak currencies. As a trend follower, I like to buy the currencies that are trending strong, and I like to sell the currencies that are trending lower. And that's basically what this shows me here at the moment. You see this line here, I've aptly colored it green to represent the greenback. This is the US dollar. The US dollar has been on a tear to the downside. And as I say, when we jump onto the charts in a moment, I'll show you some key levels that we have breached in there. So basically, at the moment, the US dollar is under big pressure across the globe, pretty much following bond yields down. You see here this light blue line, that is the euro. The euro basically being the most actively traded currency pair against the US dollar. It actually accounts for about 2/3 of the dollar index. The euro has been relatively strong as well, which you would expect to see when the dollar weakens up. But interestingly enough here, you've also seen the Australian dollar and the New Zealand dollar all starting to catch bids as well. A lot of buying interest in those as well. We had some really good data out of Australia last week, some job numbers. So money is flowing into the Australian and indeed the Kiwi as well. The purple line here, that's the CAD, lagging a little bit behind at the moment, despite the fact that oil prices are trending higher. Normally when oil prices trend higher, normally the CAD has got some support behind it because, of course, Canada, big exporter of oil. So maybe we'll see the Canadian dollar catch up later if indeed oil prices continue. Let's just jump onto the charts and I'll show you exactly what happened last week. Okay, so take a look at this chart. Now, this is the US 10-year government bond yield, basically the return you're going to get in terms of interest rates if you hold a US bond for 10 years. You see here, pretty much since the US election last year, the bond yields have been on a tear to the upside. We were there around 0.5 and now we hit a high at the end of March, early April, up there at 1.77. And since then, we have basically falling back to the time of recording at 1.55. But what you've seen here is that the US dollar has basically been marching on with this increase in yields. Now what's happening is the yields are rolling back, the yields are coming back down, and indeed the US dollar is coming back down as well. This is the dollar index. Okay, this is the dollar index. Basically, it's pitching the dollar against 6 other major currencies, and the euro is the main component, actually accounts for about 2/3 of the dollar index. And here you'll see the yield and the US dollar have been moving in sync. Now the US dollar has broken through this key level of support, and in fact at the time of recording this Monday morning, you'll see now that we have now taken out those levels of support and heading lower. So the pressure is really mounting here for the US dollar at the moment. And of course, we've had some really good economic reads last week. We had retail sales came in up at 9.8% in the US. You'd expect to see bond yields push higher as the central banks may need to raise interest rates to curb all this spending, which ultimately affects increase in prices as well. You know, central banks are mandated to control prices. You had the CPI read come in much better than expected as well. I think it came in around 2.6 year on year. Then you had the weekly US job numbers again, big miss on expectations. They came in much better than expected. So all this raw positive news coming out of the US economy, it failed to support the dollar. And in fact, the dollar ended up lower on the week, despite all this great economic news. And then we had the weekly job numbers out of the US as well. Really big miss on expectations there. Came in much better than expected. So the week was basically plagued with lots of really positive news coming out of the US economy. Maybe obviously as a result of all those stimulus checks that are arriving on people's doormats. But the point is that the US dollar didn't like it. The US dollar actually ended the week significantly lower despite all this positive news. What's that they say? Buy the rumour, sell the fact. Well, that certainly was the case for the US dollar last week. Okay, so now let's look at the economic calendar. This is basically what's coming out in the week ahead. It really is important that you are aware of the data releases coming out periodically in the week. It's basically what moves the currency markets. Now you can get your hands on an economic calendar by going over to the forexsignals.com website. Scroll to the bottom, you'll see a little tab there that says economic calendar. Basically it's here. The way this works is anything in red on the right hand side is deemed to be a high impact, i.e. when the announcement is made, if it's deviating from what is expected, you can expect to see a movement in the relevant currency, and that generally happens. So this week we've got quite a lot of data in the UK out in terms of inflation. As you know, central banks around the globe basically have two mandates. They basically have to control inflation, keep inflation normally around 2%, and to create maximum employment. That's their two jobs that they have to do. So this data that comes out gives the central bank and us clues on where inflation is going. Now think about it. If inflation is going up, the central bank has to potentially raise interest rates to curb inflation, to curb all that spending. So this week, as I say, we've got a lot of inflation data out of the UK. Starts off with the average earnings, which is basically coming out tomorrow out of the UK. Really important because obviously if average earnings is increasing, that means people have more money in their pocket, they're earning more money. That basically means they spend more money. And if they spend more money, what happens to prices? Of course, upward pressure on prices as well. So average earnings, key in data release out of the UK. More later again in the week as well. In fact, we've got producer prices out on Wednesday as well. Producer prices basically tells us how much the producers are paying for their prices at the factory gate. And of course, if that's increasing, they tend to have to push that price increase onto their customers. That's basically you and I. Then we've got a retail price index as well. Basically tells us what inflation is doing. The retail price index, it's basically inflation. What us as retail traders, consumers are seeing happen to our prices. And of course, we've got consumer price index as well. That is the actual inflation data release that the central bank looks at as well. We're going for up 0.7% is the estimate. And of course, if there's much deviation from what's expected, that tends to have an upward pressure. And pound at the moment is behaving quite strong. As you see the vaccine rollout, it's basically excelling in the UK, and the thought is, of course, the economies are going to open up quicker and businesses are going to get it back to employing and so forth. That means more money in the pockets of you and I. That basically puts pressure on the currency. Got a few speakers later in the UK this week as well. Banker of England governor is speaking as well. We always like to see what a central banker has to say. Gives us clues on where they might be moving interest rates in the future. So we'll be keeping an eye on that. Canada, got a lot of data out of Canada this week. So you need to be paying attention to that if you're trading the loonie. Okay, so we've got a lot of inflation data out on Wednesday. But also we've got the Bank of Canada's rate decision. That's when they basically tell us if they're moving interest rates. It's unlikely that they'll be moving interest rates this week, but we always look for the follow-on statement to see where they're thinking in terms of interest rates going down the line. It gives us a view of their sort of economic outlook as it were. So that is basically on Wednesday. On Thursday, we've got the ECB up here. You can see it up there. We've got the ECB. That's the European Central Bank. That's their rate decision as well. Again, unlikely that they'll be moving interest rates. Unlikely, I think, that they'll be even changing their guidance. But we always pay attention to the rate decision and, of course, the follow-on statement as well, the press conference, because it gives us clues on what they're thinking. And, of course, Forex traders are always looking to outguess what the central bankers are going to do. So we need to be paying attention to that as well. Later on in the week, we've also got retail sales out of the UK. So a lot of European data coming out. Retail sales, of course, shows us what's happening to prices on the high street. Well, prices, if sales are going up, obviously prices tend to go up as well. Remember, it's all about inflation. That is what we're focused on as Forex traders. And later on in the week, we've got this this is on Friday, bunch of PMI data out of the Eurozone. Now, PMI, it stands for Purchasing Managers Index. It's basically a survey where they survey the top, say, 400 business leaders in an economy, looking for their outlook going forward. Are they going to be employing more staff, investing more in plant and so forth? Anything above 50 is deemed to be an economy that's expanding. Anything below 50 is an economy that's deemed to be contracting. Look at these numbers here, they're coming up pretty high in the Eurozone. You've got estimations up there, manufacturing PMI out of France up there at 60. You've got a German PMI they're expecting up there at 65. So really quite a lot of optimism in the Eurozone economy. So we'll see how these survey releases actually impact the market. Are they going to be in line? We've also got US PMI data later on in the week on Friday with some housing data as well. So as you know, we're streaming live around the clock, 5 days a week, up to 6 times a day. If you want to come over to the site, you can do so. 7-day free trial. If you don't want to stay, you don't have to pay, but I'm sure you'll love it. If you do come over, let me know that you've come over, interact with me on a private message, and let me know you've come from the YouTube channel. I'll roll out the red carpet for you. If you're not inclined to do so, then not to worry. I will see you next week. Have a good week.